All right. Happy Friday, everybody. Bringing that Friday energy to you guys. As always, Friday is our recording day. So we're bringing it to you. I hope you guys are having an absolutely fantastic day wherever you are, whatever day you're listening to this on. It's going to be a good day because we got a duo with us on the podcast. I always love it when we have two people because it's kind of a dance to figure out who talks next. So this is going to be Palmy and Nancy Kitti from the Kitti Sisters. They are here to talk about how to raise capital. They have done over $300 million in apartment syndications. So they have experience. They've raised some capital. If you buy $300 million, you've definitely raised some money. So they know what they're talking about. Palmy, Nancy, thank you guys very much for hopping on the show.
Well, Gabe, thanks for having us.
Absolutely. So I told you before we got on here, we always like to start with stories and hear how people got to where they are. So why don't you guys tell us how you guys got to where you are? And Palmy, I'm going to direct it to you. Why don't you start us off?
Yeah, so thanks for asking us that question. So, long story short, we were in the fashion business, doing active income there, doing really well. Overnight, our business just collapsed because our customer closed down all their retail stores. So
Oh, no.
we, so yeah, it was a terrible time. But like we pivot quickly into real estate. At some point, we discovered passively investing in multifamily was something that was going to work out well for us. But the problem that we discovered was hey, we like multifamily. We want to get into this game, but we're brand new and we're stuck because we live in Los Angeles and you can sympathize with this. It's not a landlord friendly state. So
Yeah.
we're trying to invest out of state, but we didn't have the localized knowledge. We didn't have the connection with the brokers. We didn't have a big balance sheet. And so we were trying to figure out two routes. Do we try to analyze deals from afar and try to figure out that route, making offers just like without really having built that relationship with brokers? Or do we go the other route where we learn to actually raise capital? And that was a really pivotal point because the first deal we joined, we told our teammate that yes, we can raise capital, but we actually didn't know how.
That's the
You know,
best way to do it is just,
fake it till
you
you make
promise
it.
something and then you figure it out.
Figure it out. It was a terrible time the first deal, to be honest. But it was a valuable lesson because what got us from that point was we realized, wait, we need to actually develop really good systems to actually do this on a larger scale, repeatably, predictably. And that's where we are today. You have told your audience like $300 million asset under management. That's like $130 million raise during
Yeah.
5.5 year period. So we went from basically like zero to two people who actually understand this game now at a pretty high level.
Nice. I love it. So I'm gonna backtrack just a little bit. Your
Yeah.
story sounded interesting. I want a little bit more details.
Mhm.
Nancy, tell us what were you guys doing in fashion?
So yes, so before multifamily, we were in fashion manufacturing business. We were
Manufacturing.
learning,
Okay,
yeah, so we were producing, things like, accessories, clothing,
got it.
something that our customer dictate how much is our worth, right? How
Right.
much should we get paid? Like we're only gonna pay like you $2 or $3 for this t-shirt. While when we transition to do multifamily, we actually get to pick our worth. If we, want to be in a deal and if it's not a favorable term to us, we just say no, like next one. And
Yeah,
that's why the specialness of this is like when you specialize in a skill set that your team needs you because they can't close on a deal, you get to name your worth.
absolutely. That's funny. My fiance, she went to FITM down in LA to do for fashion design.
Oh,
But she's now in finance. So
Oh,
that's how.
that's a
fashion to finance.
that's
That's
also
Yep.
a really big transition too.
Yeah. That's how life works, right? So awesome. You guys, so it sounds like you've kind of built your company or your business around raising capital. You guys aren't are you operators on these deals? Are you the
We
general
are.
partner or do you guys just strictly raise capital for deals?
No, actually by law we can't just raise capital. Like for us, we're actually considered lead general partners, where we
Okay.
actually put together a team, and then we also now do acquisition and asset management, not just bringing capital to the game. And that's the beautiful thing is like once you learn one skill set, you can also master the other skill set so that you can have a bigger pie, right, Palm?
Yeah. So the key there was like we just wanted to figure out how do we get in the door quickly with an experienced team. We
And
didn't want to hack it with people who are at our level because we're raising millions of dollars from people and they're relying on us to do our best for their money. And
Yeah.
so we figured, hey, whoever we can find who's the most experienced at sourcing deals, so we're sure that this is the right fit, who's really good at asset management, let's not only join their team, add value, but also learn from the best as well. And so first time around, it was capital raising, some investor relations, and then it started adding on asset management role, acquisitions, stuff like that.
Yeah, so for our first deal, it was like a $6.9 million purchase price. And our last multifamily deal that we closed is $77 million purchase price, where we raised over $38 million.
Nice. I love it. So let's dive into the nitty gritty of capital raising. That is, it is one of the most important skills outside of finding good deals. If you can find a good deal and then you can get the money to close that deal, you got pretty much the entire thing done outside of, asset management, making sure that the deal actually runs. But finding the money it can be one of the harder parts, especially if you don't know how to do it. So let's go nitty gritty, step by step. What is your guys' process for raising capital?
Yeah, so at the very beginning, it was a really one-on-one process. We were told when we got started, it was like, hey, go to RIAs, go to like local events, meetups, and go and just shake people's hand. And that worked at the very beginning, but that's really a slow process.
Yes, because we didn't really know who to serve. We were trying to please everyone. We were trying to talk to everyone,
Mm,
anyone that is interested in talking to us, right? We just want to share our experience or our excitement. So we didn't know who we were serving. What we were serving, have you heard the saying, like when you try to please everyone, you please no one.
Yeah,
yeah.
so
A friend
like
to everyone is a friend to no one.
exactly. So basically, with capital raising, the one of the most important thing at the very beginning is you have to identify who is your person. And this could be related to you. For instance, if we were from like if we were a dentist, maybe we're gonna serve dentists who are now looking to transition from their career to something else or supplement their income because hey, dentistry is a hard business. It's like you're bending your back the entire time. It's backbreaking, literally. So identify the person, similar to how Lululemon found success. What Lululemon did was they didn't just serve anyone. They specifically created an avatar ocean, a woman who they say, I'm gonna make clothes just for this person. And that's
The
why every
person who goes to yoga.
who goes to yoga, who earns high income, who loves the idea of like that healthy lifestyle, right?
Yep.
So for them, they determine like every piece of clothing, every content that they produce, every marketing campaign isn't just for anyone. Isn't for two people who don't go to the gym, who don't like wearing that kind of clothes or whatever, right? It's like I'm gonna speak to that person,
Yeah.
and that message will be so precise that they have no choice but to reach out. And that's what we've done. Like we've specifically target like who are we serving?
Yes, a lot of
So
people face
who
challenge.
is I'm jumping in here real quick. Who
Yeah.
is your guys' target market?
So we our target markets are us 5 years ago when we are like, still in fashion. We were entrepreneurs. Like
Mm, okay.
we do high level stuff. We make multiple income stream, a multi-million dollar company. Like that's how we like
So basically, we serve entrepreneurs who are really successful in their current business, but also worry that what happens if they stop working, or what happens if, like us, your customer decide to shut down all their stores.
Yep. So we work and focus on them who wants to turn their profit into a lasting legacy, who wants to create that passive income, who no longer wants to like, hey, trade their time for a little bit of someone else's money, right? Who wants their money to work on their behalf.
Mm-hmm.
So I think a lot of people face this challenge when they raise capital because one, not only they don't know who are their people, but number two, they don't know what to say to them.
How to attract them.
Like what to say to them, how to get their attention, alignment, and agreement. So we focus on that.
Mm-hmm.
Nice. I love it. Yeah, I've talked to a number of people who have, built a business out of capital raising, and I found a lot of them, they kind of build it around their previous profession. So if they were a doctor, if they were
Yeah.
a firefighter, a nurse, whatever, they focus on that profession. They say, hey, nurses, hey, firefighters, I know you guys got extra income. I know you want it to work for you.
Yep.
Come over here. This is what, this is the service that we provide for you. We can get that money to work at a higher return than you're going to get if you put it in the stock market. And you're able to speak to those people so much better because you have been in their shoes. You guys were entrepreneurs. You understand the grind of being an entrepreneur, of having something fail and then being like, shit, I'm out of money. I don't have any income coming in. What am I going to do? So you can speak to that persona and really drive the message home, so they understand why it makes sense to invest in real estate. Love it. So once you have that message dialed in, the person in mind, and then the message that you're going to be saying to them, how do you kind of funnel it into a paying, well, not a paying customer, but somebody who's ready to invest in your projects?
Yeah, so this is one of the most important point is like who already has those people? Where are they congregating? Are they at some sort of dental conference? Like where are these people at? You have to, are they on podcasts? Are they on blogs? Like where, what medium, what LinkedIn, wherever they are, like discover where they are, and then you can infiltrate that. Infiltrate, not sound like a spy, but like participate in
Right.
those discussions so that you can inject yourself, make yourself findable. Most of the time the issue isn't that the issue isn't that you don't know what you're doing, it's that you're not findable. And
Mm,
that's the key. You have to be able to be findable so that those people then can relate to your story and then actually feel the connection and come in and invest with you.
nice. I like it. So let's take it down to one more level, take it down to brass tacks, so to say. So you got your target market, entrepreneurs. You have the message that you're going to be saying to them. Now you need to find specifically where those people are congregating. So when you guys kind of got to that step, what were the conferences? I don't know, other things like online forums
Yeah.
that you guys went to in order to start to raise the capital?
You see, like I think we don't believe in like a lot of like getting out there. We
Mm,
believe that they come to us
Like
like
okay.
inbound.
inbounding, because for us like we can only go so many conferences or even meetups or even talking on Zoom call. For us it's all about setting up system where they come to us, where they, hey, I want to talk to you guys. I know you can help me. And a lot of our investors are actually referral based
Mhm.
because we have gone full cycle out of our 9 deals, 3 years, three
Three
deals
deals.
out of 9 deals. And our average hold time is around 24 months. So we get a lot of inbound like referral from our existing investor and repeat investors.
Yeah.
24 months, really. That is a very low or short time frame to be holding. Do you guys, so you're sorry to switch away from capital raising here, but your strategy on the actual, on the real estate side, on running these deals, it sounds like it's more forced appreciation. You guys buy assets that need a little bit of love, give it that love, and then fill occupancy, raise rents to market, and exit within a 2 year time frame.
Well, I mean, genuinely, it's a 5-year hold, but it happens that if the market makes sense to sell, then we'll sell earlier.
Got it.
We just
So your
want more than
underwriting is 5 years, but
5 years. Yeah.
in the last couple of years where there's been unicorns, you've been able to exit within 2 years.
Yeah, the key here is like what's best for our investors. We could have pushed things like our first deal, we ended up getting a 3.11x multiple in 27 months.
Mm,
But had we kept it, we could have pushed it a bit more.
mm,
But given COVID happened, and then like all these other economic,
Rate
all
hikes.
these situations that we couldn't foresee, the key here is not to be too greedy.
yeah.
Understand like if you're hitting your investors' projections or like whatever makes sense to your investor, you do that, you exit. Even though it would have been like instead of a 3.11, maybe it would have been 3.5. Who knows, right? But like if you're too greedy about the exits, you can end up hurting yourself. Like we know friends who we even passively invest in a deal where we're like, why don't you sell now? I think you should sell. He's like, oh no, I have a fixed rate debt. We're doing fine. And I'm like,
Yeah.
and today we asked him again. Yeah, he wished he should have sold because the valuation dropped and we would have all made a killing. And now we're holding onto the property longer than necessary.
Yeah. Yeah,
Making
that's
less.
why IRR
Yeah.
does make sense in a lot of situations. I've heard kind of the debate between cash on cash return and IRR, like which one should you use? IRR does make a lot of sense because it does take that time into consideration. And
Yes.
if you're selling within 2 years, that and you get 3x multiple, that's great. Do it.
Yeah. I mean,
There's
like,
no real
I think
reason to
to hold it,
continue to
right?
hold.
I mean, like, I think the key here is like the velocity of money is very important. And
Mm,
so the idea is like when passive investors comes in, they're not just doing one deal. We want them to use the baby money and start running multiple lanes at the same time. That's when real compounding happen for them. When you think about compound interest, there's the three components, right? There's time, interest, and dollar amount. When you hear people talk about the stock markets or mutual funds or something, they only focus on time. They always
mm,
give it long enough. Look at my hockey stick on the graph. But that's actually not addressing the really like who wants to be rich when you're 80? Who wants to be rich when you can't walk around? You want to be rich now. And if you want to be rich now, like frankly, right? Like you're fit, you want to go travel the world. You don't want to be like, I can barely walk up the steps. Right? So for us, we sought out something that's the most um, low risk, tangible asset, real estate, shelter for human beings. And we decided like, if we are there people out there who's making the type of return that we're looking for, and we discovered that the answer is yes in multifamily, and that was an easy decision. So instead of focusing on time duration, we focus on the yield. And obviously the dollar amount when you're investing in multifamily is a little larger than stocks, like put a couple $100. This is $100,000 plus. Time becomes irrelevant. That goes away. The biggest component is the yield and how much you put in.
Yeah, makes sense. So let's go back to capital raising before we switch off to the quick question round. You mentioned the persona, the message, and then you mentioned that you like to attract people to you versus going out there and finding them. So what are these systems? And if you can just distill this down to maybe the top 3 steps that you take, what are the systems that you put in place to attract investors to your deals?
So this really has to do with the intentional social media that we do. So we have a podcast that we get people coming in. They'll reach out to us just listening to the podcast. Similarly to our YouTube channel, we have a lot of people that just reach out to us based on those. So we have to use technology that really like the algorithms pushing people, right? Instead of us having to right now buying ads in any business doesn't make any sense. It just the return isn't there. So you have to use technology that actually drives people to you. So it's not that we're smart about like strategically the technology to use, but it's like we're just using the software and the tools that already exist.
I think that the most important thing also is our ability to craft the message that resonate with the people.
Yeah.
Like what prompts it is just the platform, but
Yeah.
the key thing is to to find our people, to choose our people, craft the message, like have the message that resonate with everyone, and then also show them that you care by doing what you say you're gonna do.
Okay, so on that point, real quickly, Gabe. So basically, like on YouTube, there's people out there who are chasing millions of views, but no money. They're
Mm,
influencers, they're
yeah,
YouTubers, they don't make money. But for us, we're strategic. Our content, the things that we talk about, are specific to our people. And so that's how we're inbound driving people and using YouTube, Instagram, our podcast, etc. So that's kind of the idea. Like we crafted messages that resonate with our people and they reach out to us when they want to invest.
makes
When
sense.
they're ready.
Perfect. All right, I'm going to take that opportunity to move us on to the quick question round. You guys ready?
Ready.
Let's do it.
Yeah.
Starts with education, any form, could be movies, could be books, could be, YouTube shows, whatever. I just need 2 recommendations, one for general life wisdom and then one for real estate.
So first one is Never Split the Difference by Chris Voss.
Mm,
And the second one is 10x is easier than 2x by Ben Hardy.
okay.
There's many more, but those are the 2 that I really love.
Yeah, I've been recommended both of those books. I haven't read them. I've got a list a mile long of books that I need to read. But we got a 1-year-old running around, and so we just don't have tons of time. But one of these days, I'm going to get to those books. All
Yeah.
right, Nancy, how about you?
Oh wow, I'm like she picked one of them already. So I would always recommend with the basic, which is Rich Dad Poor Dad,
Mm.
Robert Kiyosaki, because I think that book not only changed our life, but changed so many millions of people's life, right?
Mm.
The way we view money, cash flow is never the same. And then I would recommend like Tom Wheelwright, tax-free book,
Wealth, tax-free
tax-free
wealth.
wealth book, because no matter how much money you make, but if you don't know how to keep it, then that's not really
Yeah, then it doesn't matter.
yeah,
You
then
can make $100 million, but you pay like
yeah.
99% of that in
And then
taxes.
that book will enlighten you to make a smart decision and smart investment
Mhm.
that grow
There you
your
go.
wealth.
I love it. All right, moving us on to the next question. This is for your younger self. So let's
Yeah.
go back to the Palmy and Nancy, who were working in their fashion business so
Yeah.
many years ago. Go back to them, look them in the eye, give them one piece of advice moving forward. Nancy, I'm going to start with you this time.
Oh my God. So it would be wealth has a need for speed. You don't have to be perfect in anything. You just have to do it.
Mm.
I love it. Palmy?
So mine is start passive income now. Don't wait. We didn't have it at the time. So yeah, I recommend that we started it.
Start sooner. That has been echoed across many episodes. So many people say they wish they started sooner. And as always, I take this opportunity to speak to whoever's listening to this podcast, if you have not done your first deal, go out there and get it done. Every single investor that comes on this show wishes they got started sooner. So this message is directly to you. Go out there, get a deal done. All right, next question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
So we started doing townhome development, so BTR, build to rent. So right now, North Dallas, north of Dallas, like Plano, Frisco
Mhm.
area, North Texas, I guess, is the most one of the most dynamic markets. There's 400 plus people moving into the area every single, well, Dallas metro every single day. We don't have enough housing there, so
Yeah,
I would recommend that.
I would recommend the same thing.
Mhm.
DFW.
Mhm.
Yeah, it's a great metro for sure. We own a couple of self storage facilities out there, and I've been looking for more. But man, people are just bidding those things up like crazy. You just can't get a good deal. All right, next question is about finding deals. It all starts with getting in contact with a seller. So, what is your favorite way to generate leads and find new deals?
Our purchases are all through brokers that have on market listing. We've only bought one property that was off market, and it was from a close friend of ours. So the thing that is, it's we tend to find that the deals that are going to market are deals that aren't hard to win. It's just like you have to have that relationship with the broker. The two deals that we bought, Houston for 68 million and then the 77 million, it all started with someone referring us, meaning our friend or they have transacted many times with the broker. They gave us street cred. They called and put in a good word. Hey, Paul and Nan are looking for this property. I can vouch for them. They're solid. They're going to get this done. We weren't the highest offer on either of those deals, but we won because the broker actually vouched for us
Yeah.
with a, so I would say like for us, it may be different for other industries like single family, or I don't know enough about self storage about that, but for multifamily apartments, you definitely can win deals on market.
Yeah. Yeah.
Yes.
And that, I mean, I've sold properties before, and it really does, as the seller, you want a buyer that you can trust will actually finish the deal. You don't want to go through, 3 months of due diligence, going to the bank, back and forth, all this jazz, and then get to the point where it's time to close and they can't close for whatever reason. It's very frustrating. And so if a broker can come to you and say, "Hey, I got this person, they're not the highest bid, but I absolutely know they will close," you're going to go with them because what is it? What's the phrase? It's like a bird in
Execution
the hand is
certainty.
better than
Oh,
a bird in the bush or something like that.
something like
Whatever
that.
that
Yeah. Yeah,
that
yeah.
crazy
That
phrase is.
is
All right. I'm going to move us on to the next question. This is about lessons learned. Not every deal that we get into goes the way that we
Mm.
expect it to. A lot of times a wrench is thrown into the mix and things go a little bit sideways, but those are the deals that we learn the biggest lessons on. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
So the deal that comes to mind is our first C class property in Fort Worth, Texas. And it wasn't the deal itself, it was the class. So it was a C class property in a rough neighborhood. The
Hmm.
lesson learned there is don't buy in the hood. It was not an easy, it's the property performed. We sold it in
20
20
months.
20 months, was fine. But the thing that was challenging was managing it.
Yeah.
Every single day, our property manager's car got burnt in front of the leasing office. We had
Damn.
to hire armed security to
Yeah.
escort her. It was tough. So every single day, it was like challenges after challenges that normal people shouldn't have to go through. And
Yeah.
we couldn't wait to sell. That's why we sold in 20 months. We're like, let's get someone
And
wants to
we
buy
and
it.
it was we make it 1.5x equity
Yeah, in 20 months. So we're like, we're gonna make money. We're making a lot of money
for
for
our
our investors.
investors.
So if someone wants to buy it, they can close. Let's sell it. Let's go.
Yeah.
And we closed that deal during COVID, so April 2020, and then we exit like in 2021.
Yeah.
Jeez.
Wait,
Yeah, it's
20 months.
buying in bad areas definitely, you can find good deals. But the thing about bad areas is a lot of the times the assets will have bad people in them.
Mm,
And that part of the repositioning, you can fix a building
yeah.
not easily, but it's a lot more straightforward. But fitting out of fixing the tenancy, the people that are actually in the apartment complex or the mobile home park, whatever you're buying, that is creating the issue, that is a lot harder. And getting the right tenants in there, getting the bad apples out, it can be a headache. So there's good deals. I won't say don't do a C class area, but it's definitely something to go in eyes wide open.
Do your due diligence, have a really strong property management company that understands that specific market and know how to handle it. Yeah.
Yeah. All right, that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, so guys, if you want to learn how to buy apartment using other people money, all you have to do is go to jumpstartsapartment.com, and that is jumpstartapartments.com.
Yeah, so using other people's money is the best way to actually scale your real estate or multifamily or any business in general. So do that on social media. We're on Instagram at the Kitti Sisters, YouTube at the Kitti Sisters YouTube channel as well.
Find us anywhere that say the Kitti Sisters.
Yeah, we're the only ones with a Kitti, so won't be hard.
Perfect. So that is Jumpstart Apartment or Apartments?
Apartments.
Plural. Okay. Jumpstartapartments.com. I will put that link in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description. And in there, you can find the Kitti Sisters links.
Yay.
Awesome.
All right, guys. Thank you very much for hopping on the show. It's been a pleasure.
Thank you so much
for having us. Ciao.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you want to support the show, just give us a review on Apple or whatever you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.